or people will be joining on the Zoom link?
It is on YouTube Live. It's already there. I shared the link now to you.
Okay, no, so when people click, will they be clicking on the YouTube link and joining, or the
Yes, YouTube link.
YouTube link. Okay.
We are live.
Hi, I just actually wanted to understand the profile of the participants and how many participants are there, so I can accordingly tweak my examples and the focus areas of the presentation. So how do I know that?
More generic business people.
Sorry?
It's more of a generic business people. We are not aware of the profile.
Okay, there's no way to understand the profile.
No.
Okay.
Nidhi can start. Nidhi.
Happy morning, everyone. Hope you all are safe and doing well. We are back with a brand new Fresh Talk episode on this weekend. Thank you all for enrolling in this event. We welcome you all. I also welcome Ms. Swetha Kochar, who will be addressing us in the next few moments. Let me give a gist about what Excel in Excel is all about. Excel in Excel is a data analytics firm that solves high impact business problems using data and technology. We provide end-to-end services in the field of data analytics and data visualization. Our core services include data analytics, consultancy, and training. Excel in Excel presents the popular talk show EiEFreshTalk on its YouTube channel, where it hosts great leader, subject matter experts in various fields from India and abroad to speak regularly on variety of topics ranging from Excel to analytics and finance to financial modeling. Few of our past events are by CA MP Vijay Kumar Sir, by Ms. Sangeeta Sumesh, by CA Amit P. Nahar. Coming to today's session, Managing Business Continuity and Finance During Uncertain Times by CA Swetha Kochar. Ms. Swetha Kochar is a chartered accountant with All India rank 13 in CA Final and rank 41 in CA India. She was a past management consultant with McKinsey & Company in Mumbai, advised CEOs of large Indian companies such as Ashok Leyland, Mahindra Finance, Sun Pharma, SBI in solving senior level strategic and operational problems. She set up her own management consulting practice called PKC Management Consulting, advising SMEs on income tax, GST, setting up systems and processes, improving profitability, fundraising, etc. PKC has a team of 150 professionals and a client base of over 1,000 clients across India and outside. We welcome you, ma'am. Before we begin, I request the participants to welcome the speaker with a hi in the chat section. Over to you, ma'am.
Hello?
Yes, ma'am.
Yes, hi Nidhi. Hi, thank you for the very generous introduction. And thank you, Deepak, and the rest of the team for setting this whole thing up. So what I'll do is dive straight into the presentation for the day. We have seen that the way business was being conducted over the past several years cannot be the same as that which is conducted this year. If we do not change with the times, then the business comes under threat. So we all know that we need to change, but then the question really is what needs to change? Where do we change it? How do we change it? How much do we need to do it? So there are so many other unanswered questions around that, which is what we are going to delve into today. Throughout the presentation, the idea is to keep all of the recommendations as tangible as possible, to give you direct action points on implementing it into your business straight. And we have backed up many of the recommendations that we are sharing with our own clients' work. So at the firm, over the last, at my firm PKC Consulting, we have been working with clients over the last 4 months in helping them manage their fund flows, making sure that their profitability does not decrease too much compared to the previous years. So we have been doing a lot of this work. So I'm happy to actually bring to you the work that we have done. So you'll see many live examples through the presentation. In some cases, I have given data. In some cases, I haven't given data. But you should know that several of the things that I'm sharing are things that we have actually done, and they have worked beautifully. So, which means that you can adopt it into your business as well. And the presentation covers all industries, since today the audience, I'm told, can range from different places, from different industries. The content also goes over several of the industries. So with this background, and just one more thing, if you have questions, you can put it in the chat box. So it'll help me understand what those areas of interest are for you. And I can tweak my examples. I can tweak the content of the presentation depending on the areas where you have further questions. Okay, so with this background, let me get in to the presentation. So the whole idea of the presentation today is twofold. For any business to run in this current scenario, one is to manage profitability. How do I make sure that at the end of the year, I'm not incurring losses, or even far from losses? How do I make sure that my profits aren't dipping too much? What is it that I can do? Because the revenues have obviously fallen across industries, revenues have fallen. What is it that we can do to make sure our profits also do not dip like that? So one aspect of the presentation is profitability. And profitability is what has been broken down into two aspects. One is cost, and the second one is revenue, because profits is obviously a difference of revenue and cost. And the second aspect is also cash flows. So I've spoken to several businessmen who have reached points where they say, I don't know if my business will survive if I can't manage cash flows over the last 4 months. I have had no inflows, but every businessman continues to have outflows. Salaries have to be paid, rents have to be paid, all fixed costs have to be met. So how do I manage my cash flows during this crisis? I do not want to end up selling away my assets. I don't want to make a wrong financial move. So how do I manage my cash flows? And the last segment of the presentation today actually talks about government initiatives. Some of the things that the government has released since the lockdown was announced, and how it is that we can use. So several things from the government side aren't really useful the way they have been framed, but there are things that can be used and can be used very, very effectively. Right? So that's the agenda that's laid out for the day. It's very comprehensive in terms of the content. So I'm going to not be able to dive into every single content. I will, depending on how much I think it is relevant to you, I will get into it. The others, I'm always happy to do it offline. I'm always happy to get back in touch. If you can write to me, I can help you on those specific areas. Right. So the first aspect, just switching back to the agenda, the first aspect of the day is on cost. Now, why is it that we're touching costs first? So in the whole lockdown, what has happened is that revenues have fallen. Some people in the months of April saw revenues come to zero. Most people actually saw revenues come to zero. May has been a small pickup. June, we thought it's going to be a better pickup, but unfortunately it hasn't been so. So revenues actually are not entirely in the control of the businessman. Whether you are a businessman yourself, or whether you work for a company, or whether you are a consultant to a company, a chartered accountant who consults for companies, the situation remains that revenues today are not entirely in the control of the businessman. No matter what we do, demand has fallen. So the first aspect that we're going to attack, the second aspect of the presentation is revenue. So we'll come to that as well. But then the first aspect, which is in higher control of the entrepreneur today, is cost. Right? And the other reason cost is really important is every rupee which you save on cost adds directly to your bottom line, unlike revenue. So if you save 100 rupees of revenue and your margin, let's say your net profit margin is 10%, the addition to your net profit is only going to be 10 rupees. However, if your reduction in cost is 100 rupees, what's going to add to your bottom line is the full 100. So the power of optimizing cost is that high, especially in the current scenario. The whole talk around cost saving is not just a pandemic phenomenon. So large companies, like you see on the chart here, there are companies, large companies that undertake cost reduction exercises every few years. So here on the chart, you see General Motors. There are lots of large Fortune 500 companies, multinationals that keep relooking at their cost structure. And I would encourage smaller businesses today to do the same thing. No better time than the pandemic to redefine your cost structures. Right? But then the next question is, which again I hear from several small businessmen, that I anyway control every aspect of my business. Every bill in the company, in fact, gets signed by me. I know every cost that gets spent, and I don't see any area where I can optimize. So what is it that I can do? So what I have done today is actually laid out so many areas where you can actually relook what you're already doing in the business. I'm going to take it area by area and give you actionable recommendations. So despite you having a tight control on the business today, there are still areas where you can shave off costs. So let's see how that can be done. Before we get into anything, cost optimization, there is a cost optimization framework that is laid out, which will help you decide which cost reduction measures you should implement and which you should not implement. Because for cost reduction, there can be so many things. Shutting down the business obviously is going to shut, but that's a ridiculous recommendation. If you put it on this framework, it will give you a value of 0. So what this framework does is it scores every recommendation on different levers. And it tells you that if the score that you achieve is 22 or above, then you go ahead with the recommendation. If not, you do not go ahead with the recommendation. I think this will make more sense once we go through some of the areas of cost reduction. So the first cost that we're going to talk about today is actually employee cost. Employee cost occupies a significant portion on whether it's a manufacturing company, retail, service organization. Employee costs can be quite significant. So what is it that one can do on the employee costs front? Right, so most people on the employee cost have actually been talking about layoffs, salary cuts, right? But I would just encourage you to think of the situation slightly differently. Now, it's not possible for every company to let go of people. In several cases, small businesses have long-term relationships with their employees. They are very close. It's not easy to let go of people. It's not easy to ask them to take salary cuts because they have to also sustain their families. So what I'm going to lay out here is slightly different kinds of recommendations where it can be a win-win for the employee as well as for your business. So those are some of the recommendations that we're going to look at. The first one is increasing the variable pay proportion. If you are paying, let's say 15,000 to an employee, is there a possibility? What I'm encouraging you to do here is actually split that 15,000 into a fixed component and a variable component. Let me just take a quick break here. I just want to check if the controls are right. Nidhi, could you just tell me if you're able to hear me and everything is clear?
We are able to hear. There's a small screen. Can you just see your WhatsApp? It's in the image.
Yes. Oh, there is this blue color screen which is constantly showing, is it?
Yeah.
I'm not sure why, because it's not there on my screen. Are you still seeing the screen, the blue screen?
Yes, yes.
Okay. How do I get this off? Let me just stop screen sharing and start it once again. Yeah. Is it any better now?
Yeah, it is better. Thank you.
It's gone now, right?
Yes.
Okay, great. And my voice is very clear, isn't it?
Yes, yes.
All right, so let's proceed. So the first component is actually on variable pay. And this is a recommendation which no matter what business you are in, you can easily use it, whether you're in manufacturing, service, or in any kind of a heavy industrials, retail, B2B, B2C, whatever it is, this can be used. And what I'm going to do over the next few slides in the presentation is talk a little bit more about how you can use it, give you very, very easy ways and tools of using it, right? Now, let me just talk a little bit more about variable pay before we get into anything else. Now, to set variable pays, what are the benefits? Why should you do it? The biggest benefit of you setting a variable pay for the company is that the goals of the employee are aligned with the goals of the company. So you do not have to push your employee at each stage to do what he has to do. The employee is self-motivated, is incentivized to actually achieve the goals of the company. So not just from a COVID perspective, but in general, from a business philosophy itself, it is a great idea to get variable pay as a culture in your organization, right? The next question arises, how do I measure the variable pay? How do I easily do it? Because to do it every month, it has to be really simple. It has to be something which just takes half an hour and everything gets done. So that is what I'm going to take you through now. So when you're talking about variable pay, you've got, let's take an example and go through the whole thing. Let's say you are a manufacturing company and you have a production manager. So your production manager has a bunch of roles, which is what is laid out on the first box of this slide. So production planning, work allocation, these are all the roles of the production manager. If you have to shortlist his key roles, there are 10 key roles. There are 4 listed here, but there will be another 6 more. So 10 key roles. Now these 10 key roles are converted into just 5 KPIs. So all that you have to measure for this person is not 40 different things that he does, just 5 things. And these 5 things, if they are smartly framed, will cover all the 40 things that he is expected to do. These 35, 40 different things that he's expected to do can actually get covered in just 5, what we call KPIs, key performance indicators. Now, how do you frame these 5 KPIs? I will show you some examples. But the next step after you frame these 5 KPIs is to measure them, and to measure them every month or every quarter, and also reward them. So an employee knows that if he achieves what he has to do, he gets rewarded handsomely. On the other hand, if he doesn't achieve, he's not going to get the pay that he was promised. And this over a period of time, done over a period of a few months or years, actually only retains good people in your company, and all the non-performing people over a period of time just exit. And that is a beautiful thing to happen for any successful company. So how do you frame these KPIs, right? That is covered. I have just given a few samples. Obviously, the scope of today and the time paucity that we have, we won't be able to go into the details. But for you to understand that it is possible to do for different departments, I've actually laid out a few samples. For the sales department, these are a few KPIs. Now, in the current COVID scenario, for example, businesses, let's say your business is doing 50% of last year. So you can set a target for your salespeople that they should push it to 60% of last year. So you can set a sales growth KPI, or you can set a conversion rate KPI. Whoever comes in to the store should shop at least for 1,000 rupees before they go out. So that can be another metric that you set. So for the sales department, these are sample metrics. Whatever suits your business, you can pick that up. Similarly, for the manufacturing department, these are a few KPIs. And I've also laid out one HR because very intentionally to tell you that it is not necessary that KPIs can be laid out only for customer-facing roles. Even support service roles like HR can very easily have KPIs. For example, one of the best ways to measure HR efficiency is how long does he take to close a vacancy in your company? If you give him a vacancy, can he close it in 1 week's time, 2 weeks' time, or does he take 2 months to do the same thing? So this is one example. How long does he take to process payroll? What are the kind of errors that happen in payroll? So there is a way to measure any role. No matter what the role is, you will have a way to measure it. I am happy to help you offline on setting these KPIs for your business. But for the sake of time, I am going to stop at this level, right? Now, what happens once you set the KPIs? There is an automated tool where everything gets measured by itself. So if you look at this slide, this whole slide for the production manager has 5 KPIs here: production efficiency, percentage of damages, quality of production planning. Now, these are the metrics that have been set for him. At the end of every month, these values come automatically based on the actual numbers achieved. These numbers get filled automatically, and based on this, his variable pay gets computed automatically. right? So all of this happens on a free platform on Google. So this is a free platform that we have developed from our own side, and we use it across our client base. I have a small video here of our own platform, which tells you how the whole system, if you have, let's say, 100 people company, 500 people company, the entire KPI measurement system can be completed in a matter of half an hour to 1 hour for all the employees. So that's how it works. Now, for the sake of time, I'm not going to get into the automated platform. If somebody is interested, you can get in touch with me and I will show you how it works. But given the current COVID scenario, it's very essential that you have conversations with your employees. Tell them that this is where we stand as a company. We need to survive the crisis. This is where revenues, this is where, if you're not okay to disclose revenues, that's fine, but at least speak to them and tell them how difficult the position today is. And one of the things that everybody can do is try and achieve the same goal, which can be done through this variable pay mechanism. So that is one of the most win-win ways of working with your employees. The second recommendation is using freelancers or interns for non-core work. This is a recommendation which you will see, which you can use depending on the kind of role. If you are a company, let's say a retail company that is trying to now go online, if you have a brick and mortar store that you're going to take online, to help you with the effort, you can actually get some digital marketing interns rather than hiring full-time employees. This will A, lower costs, B, also give you fresh blood into the business, and C, interns come with the attitude to learn. If you ask any chartered accountant, they will tell you that articles are some of the best performing resources in their own firms because they are here to learn. They want to do different things. They want to give in their best so that they learn a lot. So having interns is or freelancers is a great way to reduce costs and at the same time get good output. Now, how do you get these interns? I've also listed a few platforms that I have used in the past and that I know do a good job. So for interns, you have Internshala 2019. For freelancers, you have Fiverr. Great platforms for you to shortlist interns. The third recommendation is outsourcing of specific operations such as accounts and IT. Now, several companies have a 2-people accounts team, 3-people accounts team. Each person gets a salary of 15,000, 20,000. So you end up spending a substantial amount every month to maintain your accounts. The same thing outsourced to a third-party company can do it for half the price or something around that. So let's say an outside company might charge you 10,000 to do it, but you are paying your accountant 15, 20. So now there are questions around confidentiality. There are questions, see those, I think that some of it is just apprehensions in a business person's mind. There are several companies that are doing it. American companies that outsource their accounts here, Indian companies that have outsourced it. I don't think confidentiality is even a reason to worry. It is a great way to save costs in difficult times such as these. Automation is one of the most powerful ways. So we do several engagements at the firm where we tell the client that you can operate with just 70% of the people that you have today, because the remaining 30% of the workload will get fully automated, error-free, and seamless and sustainable. The beautiful thing about automation is you have to invest on it once, but year on year, you reap the benefits of that. So there are so many things in the company that can be automated. I will not get into the details of what can be automated, but across the board, whether it's finance, your return filing, your CRM, so many things that people are doing today can actually happen automatically, more efficiently by machines. And then there are the more obvious recommendations, which are forced leave. Asking people if there is no work, let's say if you need, instead of a 6-day working week, there's only actually work for 3 days because 50% of the work is not there anymore, then you ask people to take leave and not pay them. Now, these are all the usual things that people have used, or utilize paid leave or layoff, etc. So there are so many things that one can do on the employee cost, depending on your nature of business. What is it that suits you most? The next one that we're going to talk about is rental costs. This has been a huge area of concern. Lots of people have spoken about this. The Supreme Court has passed a few judgments around rental costs. Now, what is it that you as a company can do on rental costs? And these can be really heavy. The first thing is it depends on the relationship with the landlord. Now, what I am going to tell you is what most, what most retail companies, particularly because their rental costs can be very heavy, have done. So they have spoken to their landlords for rent waivers for April and May because there was no business. The city was in complete lockdown. Nothing moved. Rent waivers. Now, if the landlord doesn't agree, the next method is to ask for a 50% waiver, where you say, I will bear half the brunt of whatever happened. You share it with me and bear half the brunt of what happened, right? Another method to do this is to link it to revenues, where you explain to the landlord that, hey, my store at this point of time is making heavy losses because revenues have come to an absolute zero and costs, but I still have to pay my costs. So you tell him that to make it win-win, make it worthwhile for me also to continue at the store, I can link it to revenues. So you say, I will pay you 6% of sales. Now this depends. So several of our jewelry clients have said I'll pay you 6% of the sale that I'm making. There are guys in food and beverage who've told their landlord that they'll pay 10% of sales. Now it depends on the industry, but you can link it to sales. So the landlord also knows that as your business is improving, you are also willing to pay that out. The only reason you are not able to pay now is because you yourself aren't earning much. So that's another option. Let's say the landlord doesn't agree with any of these. The next option is to defer the rents, or to even shift stores around the city. If you take a drive today, and same is the case with other cities as well, a lot of to-let boards actually exist. Landlords today are willing to give away their locations for lower prices than they gave it earlier. So just in case you cannot sustain some of the places that you have, it may be a decent time to look at moving to a lower rental location. So that is another option that is available, right? One more thing that can be explored actually is co-working, especially if you are a small team of people, or you have an office in another location where you have just one or two people. Several times actually co-working works cheaper. And I'm just going to share some numbers. If you look at this set, a co-working space, per seat per month can be 8,000, 10,000, 12,000. In this case, it is 12,000. It can be 15,000 as well. In this example, it is 12,000. Okay. Now, when you look at the rental cost of a normal usual building per seat, it could work out to a much lower number, 6,000. But what we may not keep in mind is that having an independent rental location means that we have to pay the electricity, we have to buy the utilities, we have to take care of the servers, the consumables, the security. So there are so many overhead expenses that we do not take into account. So if you take some of those overhead expenses into account, the cost of running an independent office may end up being more than the cost of using a co-working space. So you can apply the numbers in your specific context and see what works better. So co-working space is another method to optimize on your rental costs. Work from home has worked beautifully. Several people tell me that productivity is higher when we work from home than traveling to office, spending that 1 or 2 hours traveling. But this can only work if you have effective employee monitoring tools. So I'll give you the names of a few tools which you can use, and they measure how well the employee is working. Is he on the laptop, browsing Facebook or watching a movie, or is he really working? So it gives you complete control on the productivity of your employee. And I'll give you a few names. It's not on the presentation. One product that works beautifully is called Hubstaff, HUBSTAFF, Hubstaff. Another one that we have been looking at is Employee Monitor. And these are all recommendations that we have made to our clients also, and they have found it extremely useful. Another product is called Employee Monitor. Another one is called Time Monitor. So depending on your budget, depending on your requirements, you can choose any of these products. Right? The last one is a very powerful one, which talks about vacating non-performing branches. So if you have multiple branches and there are branches that have been on the borderline, not doing too well, you have been waiting for it to turn. Now may be a good time to actually, attack it and say, no, this is not working out. Let's shut it, and we can look at reopening it at a better time when business improves. So if you've been delaying that decision, maybe the time to take it is now. Another one is vacating non-sales spaces. Having sales spaces is one thing. There are companies that have taken that have been spending rent on non-sales spaces like warehouse, hostels, support staff quarters, etc. Which maybe you can look at optimizing, but you don't need such a big warehouse. You can maintain the same level of sales with a smaller warehouse and having lesser stock. That will make you more efficient as well. So what I've laid out here is actually an example for a client that had 3 godowns for stock maintenance and 1 support office for staff dining. And they spent 35 lakhs per annum on these non-sales spaces. So what we recommended the client to do was to construct 1 large space of their own, for which we arranged a loan, and at about 9.5%. So if you put the interest rate, it comes to 19 lakhs. Vis-a-vis the interest, vis-a-vis the rental of 35 lakhs that they were spending. So the interest cost is 19 lakhs per annum. The rental cost that they were spending was 35 lakhs. So net they ended up saving about 16 lakhs. So this can be a huge amount for any company. Obviously, the challenge is you should be able to get a loan. Now, if you do have a balance sheet which will support getting a loan, please look at buying out some of the rental locations that you've been using or making your own spaces. Now, if you are not in a position to take a loan today, then some of the other recommendations that will work for you. Okay, so what I'm sharing now is a few statistics of what India as a whole has done on rentals. So if you look at the second snippet that I've put here, 16% landlords waive rent for up to 2 months and 41% gave tenants more time to pay. So that is a survey which was conducted by 99acres.com, and that was the outcome of the survey. So here also there are several companies, large companies, our own clients who are landlords to large companies. I'm not going to give you specific names, but very large companies. Some of the most respected companies in the country are tenants of some of our clients, and they received a letter in the first month of the lockdown saying, we're not going to pay you rents for the next 3 months. So there are large companies that are doing this as well. Obviously, for a smaller company who has a relationship with the landlord, this can be harder. So if you are in a situation where you have a relationship with your landlord and you don't want to spoil it, then the best way to do it is using empathy. So share with them how difficult it is, how you are rethinking even having the location, because it may not make sense given the business environment outlook for the next 6 months. And when you genuinely share those difficulties, there is a chance that at least there is a 50% agreement. Right, let's move to the next component, which is electricity costs. I'm just going to go a little faster over these. So this is again a live recommendation that we have done at one of our clients, where he was using the usual government rate of electricity of 8 rupees per unit. So his electricity charge per annum was 1.19 crores at 8 rupees per unit. So we put him in touch with a windmill electricity supplier who supplied electricity at 6.8 rupees per unit. So there was a per unit saving of 1.2 rupees. So at an annual level, this client ended up saving about 18 lakhs, 17.98 lakhs. And this is a recommendation that we gave in the mid of April, and they have been seamlessly using it for the last few months. So this is again, so you don't need to put up your own windmill. That is going to again require huge capex. I am talking about you getting supplies from a windmill electricity supplier rather than getting the usual grid power from the government. IT costs. One of the best ways to save IT costs is to use cloud options, SaaS options of softwares rather than investing in the server options. Because when you are looking at a server option of a software, you have to buy the server, which can cost a few thousands to a few lakhs. You have to have a person who's maintaining the server, maintaining the backup. You need to have some kind of training in handling these equipments. But on the cloud model, you only have to pay that monthly subscription fee. And the best part of the cloud model is actually the fact that you can dump the software. If you don't like it, you use it for 2 months, you don't like it, scrap it. But if you've already invested a few lakhs into a software, very difficult for you to change. So cloud recommendations, or again, all the talk about confidentiality, will I lose my data? I think we should probably understand that some of the largest companies in the world are also using this, and there have not been many cases of losing data or sharing of data. Okay, let me get into the next part on finance cost reduction. So talking of interest cost, finance cost can be two major things for most companies. One will be interest costs. I'm going to cover interest costs in the last segment of my presentation, which is on cash flows. What I'm going to cover here is bank charges, which is again another big component of finance costs. And one of the simplest ways, the most easy ways for you to do it is to start using UPI or QR codes over card payments. So if you are having a swiping machine today where people are swiping their debit or their credit cards, you know that for every sale you make, you pay a 1.5% or a 0.6%, depending on whether it's a credit card or a debit card to the bank. However, you use the UPI QR code option, and what you'll end up paying to the banks is nothing. So again, this is an example of another client where they were using two cards and they were spending about 17 lakhs in bank charges. So we told them to start having the UPI option at all their outlets. Actually, this client just had just two outlets, of which one did not even open. So just one was open. And at that outlet, we told them start having the UPI options and encourage your customers. So have information around the billing area that people can also use the scanning method. It's actually much simpler than the swiping method. And we told them, just assume that 25% of your customers will move. So 75% will still use cards, still use traditional methods. Very conservatively assuming only 25% of your customers will move also saves them around 4.2 lakhs. Zero cost in implementing this recommendation. Right? So if you are chartered accountants working with clients, if you can take these kinds of valuable recommendations to your clients, they will start looking at you not just as a person who files returns, not just as a person who signs a balance sheet, but as a valuable business advisor. So you make yourself indispensable to your clients, right? Obviously, some recommendations will be already implemented at some clients, some will not be. But among so many recommendations that I'm sharing, I am sure that there will be a few at least that you can use depending on whether it's your business or your client's business. Right? The next one on marketing costs, very, very, very interesting. Most traditional companies haven't today explored the power of digital marketing. I'm just laying out some numbers here for you, which talks about the cost of traditional marketing vis-a-vis digital marketing. So it is still in nascent stages in India, at least for some sectors. Fashion obviously is heavily advertised on social media. There is still a lot of power. If you have been using traditional modes of advertisement, I highly encourage you to start looking at the non-traditional channels. Another recommendation is anything that you spend on marketing, spend on immediate revenue. Any kind of marketing that is done for brand building, etc., can be deferred for now. Use marketing that will result in immediate sales so that your cash flows start moving. Right, next segment, very, very important segment, procurement costs. Procurement costs, one of the first things that you can do is introduce alternate suppliers, bring in some competition in your supplier base. Let me just. Right. So if you are a good customer to your suppliers, you have been paying them well, buying from them, the supplier also does not want to lose a good customer like you. So if you bring in some competition on your supplier base, between that competition, there is a heavy potential for you to optimize your prices. Second, with your existing suppliers, again, speak to them. The same thing, use the same approach that I recommended on rent. Speak to them, tell them how difficult the situation is, and ask them to go down on their prices, or ask them for discounts if you are paying on time. If you are paying within the specified time limit that he has given you, ask for those cash discounts. When times are good, we didn't have to squeeze every corner, but today when the going has gotten tough, costs need to be optimized in every manner. You know, the beautiful thing about, I mean, or not so beautiful thing actually about the whole cost optimization thing is there's no one answer to it. You need to do 10 things in order to save money in the business, because cost saving is more like every drop of water makes an ocean. That is the concept on cost saving. So wherever, even if you can save a 20,000 here, or around 50,000 here, or 5 lakhs here, overall it will add to your bottom line. So renegotiate. If you can do long-term contracts, if you can tell your supplier, hey, I'm going to buy from you for the next 2 months, if you can give me a 5% discount from the price today. So renegotiate with your existing suppliers using different methods. Make centralized purchases. If you have multiple locations, 2 warehouses where you're doing purchases separately, 2 manpower who is inverting goods, bring it into one central location. Buy only what is selling. Today, there is no room for dead stock. I will talk a little bit more about this on the revenue side, so I'll skip it for now. Look for e-procurement. Again, this is something that companies haven't tried enough in India. There are several companies, several websites where you can procure your office supplies at a much lower price. I have also listed a few names for your reference. One is called industrybuying.com. No matter which product you look at on industrybuying.com, you will get a 20% off, 30% off. And if you can apply such a discount across your office supplies, you'll end up saving money. I'm not going to get into Zillingo, etc. Transport cost, again, very interesting. We have recommended this to clients, not during COVID. This was a recommendation that we had given almost 2 years back to many of our clients, and we have seen beautiful results. So before I get into this, I'll just give you a background. Most companies actually use traditional suppliers. So you can check your own freight vendors or your own transport vendors. Most companies have a local supplier who will charge, let's say, a flat 200 rupees, 300 rupees from this area to this area, right? If you are using one of those, what you can do is try some of these other companies, right? There are companies called Rivigo, Potter. There is a company called Link, again, very popular in Chennai. Link, Potter, Rivigo, so many ones that are here that if you use, they will charge you not on a flat basis. They will charge you for every minute 1 rupee or 2 rupees. For every kilometer, this much rupees. And if you overall you see the kind of transport that you end up using, you will save around 10 to 20% of costs. So this we have seen across our clients. We gave them 2 years back, and over the last 2 years, they've been using this. And besides the cost saving, using these kinds of innovative transport vendors also gives you other benefits because they are all technology based. All right, production cost. I don't know how many manufacturers we have today on the platform. I don't know how many manufacturers we have, right? But still, let me just quickly take you through this. Reduce raw material and packing material consumption. So the way to do it is a few ways. Now, if you're using 10 different raw materials for your manufacturing, if you have 2 different packing, let's say a carton box, a trapper, you use some branding, packaging, etc. One, try and see if you can eliminate anything, and obviously, you can only eliminate that which doesn't add value to the customer. If you are doing some extra branding packaging, or you're using a raw material which actually doesn't matter whether it's there or not, so try and see if you can eliminate. Second, can you use a cheaper alternative of that same raw material? Third, and I've not listed that here, is actually reducing the quantity. So this was again something which we recently recommended to a garment manufacturing client. We told him that you are issuing this much fabric per shirt, this much fabric per trouser. Why don't you look at reducing the fabric issue by just 3 millimeters? No significant amount, just 3 mm. Reduce the quantity you're issuing. and the output of the shirt and the trousers remained the same, right? But on the fabric cost side, they saved a huge number. It ran into several lakhs on an annual basis, and the output, all of that remains the same. So if you can even do a small change on the inputs that you're putting into the product, you will save a big amount because the number of units can be so many. The third one is, of course, reduce damages. Fix production targets for employees and link it to payments. Improve customer service. I'm not going to get into that. I'm not going to get into IoT. These are really, really technical topics, because when I talk to you about faster production, the next question will be, how do we do it? And that's a huge theory, different topic altogether. So we have done this successfully for many clients, where we can increase production by 20%, 10%, the same cost. What you end up doing is your manufacturing costs go down significantly for the same level of sales. And if your sales are lower, then you push your manufacturing costs even lower. Those are different topics. Let's not touch base. But at the end, so I think this brings us to the end of the cost discussion. I have shared several recommendations which you can try and use in your respective companies. I'm trying to figure out. Deepakji, would you know how I can see the video of at least some of the people that are there, at least the panelists who are there?
Video you can't see. It's in a YouTube only.
Yeah. No, at least the panelists, all of you who are there.
Participants, you can click on the participants. Third option.
Third option. Right, it's okay, let's continue. All right, so this brings us to the end of the cost discussion. But if you just come out of the detail, right, step back. One of the first finance mantras for any successful business is to fix cost budgets. To have a proper tab on your business, fix benchmarks. That in my business, I will make a gross margin. So I'm actually giving you some industry benchmarks from several of our clients. This is an accurate here, naming no particular client in specific, but I'm just giving you some benchmarks for the apparel retail sector, electronic retail sector, food and beverage sector, and this is an aggregation of several of our industry companies as well as our own companies. And this number will differ whether you're a manufacturer. Depending on your sector, this number will differ, but fix a number that my employee costs will not go over more than 8% of sales. My net profits will not go more than 3%, or net profit is as an outcome. My employee costs will not go. My marketing costs will be fixed like this. Fix a number for your respective business and track it for every branch, for every month. Make your accounts people give you a report in exactly this format every month. So if there is any deviation, you attack it right then, rather than wondering at the end of the year, what happened? Why are my profits lesser this year? Why are my cash flows tight this year? You track it on a monthly basis for every branch, and you will not see any issues on your profitability. Right. So let's move to the next segment, which is revenues. Now, on the cost front, so we have discussed several recommendations, but I understand that costs can only be optimized to a certain extent. You cannot zero down your costs. You can only reduce it to a certain extent. There is a limitation there. So the next thing that I'm going to talk about is revenue. On the revenue front, there is no such limitation. There are so many innovative things that you can do today which will help you drive revenue. So I've broken this into 4 quadrants that you see on the screen. I'm going to take you quadrant by quadrant. I'm going to share a bunch of different ideas that we have, again, used at our clients. Some we have not used, but I am very sure that applied to your business context, you will see amazing results. I've broken this into 4 contexts. The context is the same: product, price, place, promotion, but the ideas within are all to address challenging times. So the first part of the discussion is around distribution channel. Yeah, around distribution channel. So there has been so much talk on online versus offline. I remember 3 years back, 4 years back, there were so many seminars saying, will offline cease to exist? Is e-commerce everything? That was the situation then. Today, I think the debate is fairly settled. The answer is kind of known that today it is about omni-channel. If a brand has to sustain in the long term, if a company has to be successful in the long term, a company needs to be omni-channel. It needs to have an offline presence, it needs to have an online presence as well. And to do that, there is no better time than COVID. COVID is almost encouraging us to start doing more things online. And one of the reasons this is so powerful, some of the recommendations can be used right now, is because today we have time on our hands. One thing that we are not constrained on today is actually time, which is the biggest constraint when there is no lockdown. So there is no better, since you have this extra time in hand today, you can use some of these solutions that will give you long-term enduring benefit to the business. The first part of what I'm talking about is WhatsApp. You and I know how much time we all spend on WhatsApp, and that's not the case with us alone. That's the case with any class of society, right? Whether it is the people that work in your houses, whether it is CEOs of companies across different strata of society, WhatsApp has occupied a large part of our mind space and time. So the mantra here is, if your customers are spending so much time on their mobile phones, on WhatsApp, then where should your brand be? Your brand should also be where the customer is. And that is when you become a successful brand. That's when your marketing becomes successful. So you need to be where your customer is. And one of the easiest ways to do it is to offer WhatsApp shopping. Now, how do you do this WhatsApp shopping, right? The biggest problem that I see with e-commerce is, some of my clients tell me, e-commerce, it won't work in our sector. Or they say it'll work, but then it's very small, it's not worth the effort. Or some people say, I don't know how to do it. We are old, we don't know how e-commerce works. So what I'm going to show you today is actually very, very interesting. I'm going to show you that to actually use online, to use e-commerce, you don't need to have any large knowledge e-commerce. You also don't need to have too much knowledge on this. I'm going to show you some simple products that you can use that will help you build your e-commerce platform in just a month or two, and paying a few thousand rupees every month. So first, let's talk about WhatsApp shopping. So let me show you this little demo. It'll help you understand what I'm talking about. Sorry, just give me a moment. All right, so sorry about that. Okay, so what I'm going to show you now is how a simple software product, if you integrate it in your business, it will help you offer WhatsApp shopping to your customers. It will help you get your products or your services to the customer's WhatsApp simply by using a software platform like this. And this software platform need not cost you too much. It could be a few thousands every month. So I'm going to show you a small product. So this is for a grocery store. Okay, and everything happens on WhatsApp. On the customer's WhatsApp, this chatbot is asking for questions, is automatically giving responses and completing the transaction. Sorry, I'm not sure why. Yeah, here you go. So the chatbot automatically goes to the customer's WhatsApp and says, hey, where do you live? So the customer chooses Mumbai. The chatbot says, great, we are delivering in multiple places in Mumbai. Please choose your PIN code. So if you are in just a single location, you don't even need this. Right? Please select the type of product that you want. So the customer selects Indian grocery. So it says, okay, let me give you product options. So now these are the product options. It takes you to a small different screen where it says, okay, there's oil, and then the customer chooses oil, confirms oil. Next, it selects quantity. It selects 3. The customer selects 3. Shall I confirm? Yes. Shall I add to, now it says added to cart. It says pay now. And then thereafter, the payment link comes in. The customer presses the link and completes the payment. So it can be as seamless as this. So the point I'm trying to drive home is you need not, have anything very large to you to get to a customer's WhatsApp. There are so many tools available today that will help you reach your customer. Even if the customer can't come to your store, you can reach the customer just using these simple tools. So I've shown you a product which we have used for one of our clients. We had recommended and they have been using it. They're in the food and beverage, they are in the retail space. So WhatsApp shopping can be as simple as this. There are some of our clients who have started doing WhatsApp video shopping. If a customer can't come through videos, they help the customer select it and then do the home delivery of those products. Right. Let's move to the next component, which is not WhatsApp, which is general online. So the second one is your business needs to start being online, and again for that you need not have the entire knowledge of doing it. There are again products. I have listed a few products for your reference here today. Shopify, Store Hippo, Shopster. Now these products integrated into your POS platform, into your inventory management platform, will help you put those products onto your website, will help you complete the payment channels on your website, will help you with the dispatch, taking in of the orders. Most of those things get handled by these software products. Right. So I have actually given you a demo again because we've used it at one of our clients. But for the sake of time, I'm going to skip this because I've anyway given you the name of that. Right. So that's again, so it will help you today to have, even if you feel that my online sales are not going to be too much, trust me, 5 years from today, it's going to be a bigger number. And 10 years from today, it's the online market is growing at a much higher pace than the offline market. So it's possible that 10 years from now, the online is going to be larger than your offline. So the investment today will give results to you and to your second generation. Next one, my next recommendation is not online. This is an offline recommendation. Go to the customer if the customer can't come to you. So what we're saying here is again things that we have done for one of our F&B clients in Madhya Pradesh. They have a small setup, but what we told them is during the lockdown, in fact, just after the lockdown had eased out and vehicles could move a little bit, they started to approach housing societies around Bhopal, where there were 500 flats or 100 flats, and they started taking these mobile vans with their food products, their sweets and their namkeens, going to those local communities and setting up shop there. And you will not believe it, every day for a small company, every day they were making sales of around 40,000 to 1 lakh, depending on the size of the community there, right? And cash inflow of 40 lakhs to 1 lakh for during that kind of a tough period can change the game. We have done this for some of our apparel clients as well. We have told them to take these small halls next to the customer to display some of their products. Right. The next recommendation that I have is actually is again on distribution, a very, very powerful recommendation called collaborations. Now, if you can't reach every place where the customer is, can you tie up with people who have a larger presence than you? So, for example, Wow Momo Foods is a Momo joint. They have tied up. So they have Wow Momo Foods had like 274 outlets. They have tied up with Cafe Coffee Day, which has 1,000 plus outlets, and they are now stocking their Wow Momos on every Cafe Coffee Day outlet. So just by this one master move, Wow Momo Foods is now available in over 1,000 outlets across the country. It's a master move given today's situation. And the same kind of master moves can actually be applied in your business. If you just find, let's say if you are not you are in a certain region, can you collaborate with someone else who is in another region, give them a share of your margins to carry your product line? There are so many ways to do this. Again, for the sake of time, I'm not going to get into those details. right? What I've also done is actually given you a few options of being omni-channel for B2C. My belief is that omni-channel is not just for B2C, it's also for B2B. So I've given you some platforms where if you are a manufacturer, you are a B2B service player, you can have your product sell online through platforms like Trade India, Industry Buying, Power to SME, etc. The next one is on price. So price is the simplest thing that you can do. Over the last 3 months, we conducted several surveys as part of our firm PKC. We conducted consumer surveys so that we can take those insights and give it to our clients who serve these consumers. So we got two broad insights from the survey, which I'm going to share with you. One is that customer priorities have changed. Customers would earlier have a loyal brand. They would be focused on price, and they would choose products accordingly. But today, their priorities have changed. Today, they have two priorities. One, safety. I will shop at places where I feel safe. That's what consumers are saying. Second, where products are available, so that I don't have to go to multiple stores to buy what I need. So if you see, there is a dynamic shift between what consumer preferences were earlier and what they are today. So given the current situation where price is not at the top of the mind of the customer, one of the simplest things that you can do is increase profit margins by a very small percentage, maybe a 0.25%, maybe a 0.1%, 0.5%. Even a small change in your margins can go a long way in increasing your bottom lines. No discounts except on non-moving products, and focus on select price ranges. I'm going to skip some of these things because it requires me to explain to you my client's specific situation. Okay. So, but what I'm trying to tell you on price is if you are selling something for, let's say, 460 rupees, can you make it 465? It's just 5 rupees additional for the customer, but for you, over so many units, it can mean a huge increase in your profits. Right. The next set of recommendations is very, very interesting. Is not as easy as price to implement. They are on products. So what the first recommendation is, avoid stock out. Now, I know that this might seem like an obvious item, but it is actually not so obvious. If you ask yourself, how many times in the last 2 months or 3 months have you tried finding a product and the supplier has told you, sorry, not available? How many times have you gone to a grocery store to buy something and it's not been available? How many times have fruits and vegetables not been available? I am sure all of you would have had this experience at some point of time. That's because the supply chain has been so weak over the last 3 months. And you now apply the same context to your business. If your customers have approached you and you have told them not available, you have lost some part of the revenue, which is anyway so hard today. Even within that, you have lost a part of your revenues. So my recommendation is that even if even if you are losing, let's say, 5% of sales because of stock out situations, 10% of sales because of stock out, just by focusing on having enough product availability, you can immediately increase revenues. And how do you make sure that you don't have stock outs? Very, very simple. You need to have a close check on what is the daily stock that you have in hand. Today, so much time is available. You can get a proper stock audit done, implement proper systems. And this is something that all our clients follow meticulously. They have proper processes by which every product, goods inward is recorded, goods outward is recorded. So you have live stock. No matter when you log into your system and you'll say live stock, and you know the products that are selling, ensure that for all the fast moving products, at least 1 month stock, that's the benchmark, 1 month stock is available. So if today you don't have those processes, you don't have stock in the software, I am happy to reach you offline and I will tell you how you can simply do it for your business, or I can get my team to get it done for you. Having that information in your hand to know when should I purchase, how much should I purchase, is a very vital tool in managing business effectively. So if you need some assistance, they're happy to assist you. Introduce allied products. Right. I'm sure all of us have friends or known people who were in a different business, electricals business before COVID, and now during COVID, so many people have gotten into the sanitizer business, masks business, etc. So I'm not asking you to do that. If you can do it, okay. But let's say if that's not everyone's cup of tea, if you can't do it, what I'm trying to tell you here is you can still, in the realm of your existing business itself, move your product line to something that that can be used in the current times. So let me give you a few examples here to make this real. Let me give you a few examples. We have a manufacturing client who's into the manufacturing of felt products, right? It's a technical textile product. Now, that same machinery is what can be used for the manufacturing of mask fabric as well. So over the last 2 months, they have started manufacturing fabric for masks as well. This is one example. Another example is of a company called, one of my friends' companies called Zilingo. It's a unicorn. It's one of the world's 40 unicorns. They are in the business of linking fabric manufacturers or garment manufacturers with garment retailers. They manage the supply chain between garment manufacturers and retailers. They have moved their entire supply chain to the supply of masks and PPE equipment. So getting that from manufacturers around the world to healthcare companies, to hospitals, and to institutions that need these products, to governments that need these products. So you see, they were in fabric garment business, completely changed. Now, whether you like to do it or not is a different question. But what I'm trying to tell you is, no matter what the business is, there is always something that you can tweak. If you are in professional services, can you look at changing your services? So let's say for our firm, like talking from my firm's perspective, we used to do a lot of engagements earlier on setting up systems and processes for SME clients, helping them improve profitability or expand from 1 location to 5 locations. Now, in today's COVID scenario, it doesn't exist. Absolutely, nobody is looking at expansion. Nobody wants to invest on systems, processes, technology, automation, etc. So the whole game today has changed now for us on how do we help clients reduce costs? How do we take them online? So we are taking several of our brick and mortar clients online. And this, again, I'm giving you a few examples from around. It's depending on your specific business. I am happy to chat offline after the session is over. We can have a chat about some of these things. In fact, I remember, in the month of April, we had reached out to all our clients in the garment retail space, and we said, once the lockdown opens, your usual products are not going to sell, but some products are going to sell very heavily. So we got them to stock up on nighties, on inner garments, on dhotis, on cotton t-shirts, etc. And that's exactly what happened. After the lockdown opened, the sales of these, because it was summer and people were at home, they needed pajamas, they needed homeware basically, and the sales of those spiked. However, the sales of wedding lehengas, suits, all of those have come to a standstill. So it's not like demand doesn't exist. Demand exists, but it exists in a different form today. The question is, have you adapted to the changed demand? Right? Stock affordable brands. Of course, money in the hands of people is lower. Stock affordable brands. I think we've spent quite a bit of time on products. Let's move to the next section, which is customer reach. I'm going to talk about this point. This is the most powerful of all points, reach to regular customers with the help of CRM data. But before that, I'll cover some of these other things. If you are not marketing online today, best time to do it. Invest in building a website, invest in having some search engine optimization done. Doesn't matter what product you sell, what service you sell. If a customer let's say you are in Mumbai, you're in Chennai, if your customer comes and looks for your product, your name should be there. And you should start getting some kind of revenue using these models. If today you don't have the time to spend on this, once the lockdown opens, you're not going to have time either. Or once business improves. So that's on customer reach. The next one is reach out to regular customers with the help of CRM data. One of the biggest assets today is actually having your existing customer relationships. In today's tough market, it's obviously getting extremely challenging to add new customers, get new clients. But what you can do is look at your existing customer database and see if you can cross-sell something to them. If you are doing 10 services, you would have done one service for one client, one service for another client. Can you look at helping them with some of the other things as well? Obviously, you can't serve everyone. So if you see the red boxes here, some people don't need some services, but there is always a yellow box where they need it, but you haven't yet given it. Even same thing for a product as well. I'm going to skip some of this. Right. So this can be a very, it seems very intuitive that, yeah, I've given all my products to everybody that needs it, but that need not always be so. When business comes by itself, we are so busy serving the existing business that we have, we may not have thought of these things. But today is a good time. Put all your clients on one side, all your customers on one side, put all your products and services on one side, and do this cross mapping. Believe me or not, you will find these yellow areas. In fact, when you do this exercise, one of the other things that you can see is I have so many clients who are in this space, who need this kind of a product, but I'm not stocking it today. Can I start stocking this? Because I have such a large base of clients who need this, can I start doing this? Does it make economic sense for me to do it? So it will also open your eyes to newer product segments, and that will also help you increase revenue. So the second finance mantra, this brings us to the second finance mantra, which is be on the top of your profitability numbers for every month and every segment. At the end of every month, get your accounts team to give you your profitability numbers, not for the business. The key point here is for every segment. So if you are dealing with 3 types of products, get a profitability for every type of product. Now, how do you get these numbers? Simple things that you can do if you're using Tally. There are simple ways by which you can get your costs to be recorded segment wise. Start doing those kinds of simple things. It depends on whatever product you're using, whether you're using Tally, you're using Busy, whatever product. Again, if you have specific questions on how to do this, because these are really simple things. If you don't have it in place already, you must have it in place. If you have questions, depending on the product you're using, you can get in touch with me offline. I can get my team to set this up for you. Now moving on to the next segment, which is on cash flows. So finance mantra 3, do not stop with profitability. Keep fund flows in mind at all times. So I've shown you an example of a company where the income statement can show $16,000, but the cash flow is only $5,000. And that's the case with I have so many clients who come in and say, my business is good, I make margins, my margins are 30%, but my bank account always has such a small balance. I don't know why. My bank account always has only a few thousands, a few lakhs, but my business is making money. Where does it all go? The answer is having a control on your fund flows. So this here is the single most important thing for a company to do today, which is making a cash flow forecast. I've also actually given a full format of this because this is so important. And I'll give you a context. So there are entrepreneurs who have been calling for the last few weeks and saying it is getting very difficult for us to manage. We are not able to pay salaries. We can't seem to be paying rents. I don't know what to do. If I have 2 branches, should I sell off 1 branch? Should I get an equity investment? Should I sell off 50% of my business in exchange for 1 crore? Or should I get, I have a friend who's giving me a loan at 24% interest rate. Should I get it? Because I don't know what to do. I have so many payables, but I'm not getting any money. So people are taking these kinds of crass decisions. I won't call them crass. It's just that pressure that they are in, that we are all in, where we don't know how to manage. Now, In order to know how to manage, the first step is to put a cash flow forecast. And for the sake of your convenience, I have given you a full format in which you can put a cash flow forecast. So put your inflows, because only if you know how bad the position is. So, in one of these clients who said, I'm going to sell off one of my branches, I asked him, so how much is the shortage that you have? So then he went back. I gave him this format. He put the numbers down and he said, my shortage is I don't know if I can share the number, but it was an amount which wasn't worth him selling a branch. And only when he saw the number himself, he also understood that, I needn't do that. I have built this branch over the last 6 years with so much of effort. I cannot let it go just for these 2 months of difficulty. So then we arranged for him something else. So only if you put these numbers down will you clear the clutter in your mind. And I'll just explain this format a little bit. So you have 3 scenarios because we don't know what demand is going to be. So if you see different scenarios, one, it says 80% of last time's demand, last year, same month demand, 70, 50. Now any one of these could be applicable for your business. So put the inflows. What are the cash sales? What are the debtor collections? Even debtor collections, there could be different ways of doing it. There will be some of your customers who are very diligent. No matter how difficult it is, they will make all their payments on time. They want to make payments. So for those, you can put 100%, or for companies who are doing well, 100%. For those who can only collect with follow-up, assume that you will only get 50% of the money. And some companies have been completely washed out. Assume that you'll get 0% or only 25%. So look at your debtors and put your collections. Put this cash flow forecast for the next 6 months. So from July to December, for the next 6 months, put 3 scenarios. The entire 6 months, you can just put one column, and for each scenario, 3. So totally 3 columns. 6 month scenario 1, 6 month scenario 2, 6 month scenario 3. Then put all your expected cash outflows. For the sake of time, I'm not going to go through this line by line, but it's all available on this. So it takes you through every single cash expense of yours. And finally, it brings you to a red bucket. I'll talk about red bucket in the next slide. But here it talks about what is the net surplus or shortfall after you put these numbers down at the end of these 6 months or during these 6 months. In fact, it's even better if you put one column for every month. So you'll get to know if in between you might be in a cash shortage situation. So put these numbers down and you compute your surplus or shortage. If you are in a surplus position, nothing to worry. Even if all your friends around you are saying, oh, things are so difficult, you know that you are okay. It doesn't matter. Even in the third scenario, which is a worst scenario, if you are doing okay, you are fine. However, if you have a shortfall, then it needs to be addressed now rather than when the bank is sitting on your head to pay the EMI, or rather than when your employees are creating a ruckus. The time to arrange funds is then now. So if you have a shortage, I'm next going to talk to you about how do you bridge the shortage. Before that, I'll just quickly take you to red bucket, which is our finance mantra 4. For any business, it is essential to build a red bucket, which is 2 months expenses kept aside as reserve. 2 months expenses, put it into a separate account, call it a red bucket and leave it. Don't touch it, except in situations like this. At all times in the business, have or build a red bucket. Right? Let's move to the next part. This slide talks a bit about which customers to get in touch with, who should you give credit lines to, how much is the limit that you should give. This talks a bit about how you manage your payables, different types of payments, supplier payments, expense payments, and investments. So now the next question is, how do I bridge a cash flow shortfall? So if I have a shortage in any of the months, how do I bridge it? The first method is to avail your collateral-free extra funding under the government schemes. Sorry, I'm just going to pause for just 2 seconds. Have a gulp of water. Just give me a few seconds, please. Hello? Hello?
Yes, Swetha.
Yes, I'm sorry about. Can you see me now?
Yeah.
Yeah, okay. So let's move to some of the recommendations here. So the first part is the collateral-free extra funding that's available under the government schemes. So over the last 3 months, government has come up with a whole bunch of schemes. I'll give you a few details of those as well. Actually, let me skip to that. So what we've done is, as we have helped our clients over the last 2-3 months, we have come across several of the bank schemes, which are all given under the emergency credit line guarantee scheme. All the banks have different rules to this, but prima facie, the rule says that if your loan outstanding is under 25 crores and if your turnover is under 100 crores, you are eligible to get 20% more from your current outstanding amount, collateral free from the bank at decent rates of interest. So most banks have come up with different options. I have laid out a few here for you. Canara, Bank of India, Union Bank, Bank of Baroda, etc. If your bank hasn't given you that option already, please get in touch with them. If you're having any trouble, actually, I've laid out only a few here. I know Indian Overseas, SBI, PNB, most of them have come up with these options. If you're facing any trouble with the bank, happy to help you. You can get in touch. The next one is if for companies which don't have an outstanding or have already exhausted that 20% or don't have a facility from the bank at all, debt-free company, what do you do then? The next option is to go for your bridge or term loan against your available business or individual collaterals. If you have some business collaterals that you can possibly give, then you can look at getting a small bridge loan. If you don't have business collaterals that you can give, then some of your individual collaterals, let's say you get a loan against property or an individual loan that you then infuse into the business. See, again, these are all only situations where we're talking about a shortfall. When if you are in a surplus situation, then you don't need to get into further debt. But if you have a shortfall, these are some of the ways you can get over them. The next one is actually an interesting one. There are cases where you would have given a 10 crore collateral against a 2 crore loan. Banks are very smart. The more the collateral you give them, they're going to take it. But the truth is you don't need to give them a 10 crore collateral for a 2 crore loan. If any of your loans are like this, reach out to those banks again and ask them to enhance your loan outstanding, because the margin is only, depending on the type of loan, it is only about 30%, 40%. So you can actually enhance the limit using your existing collateral itself, right? If the banks do not agree, then it may be a good time to move banks. So take that same collateral to another bank and ask them for a higher loan. If you bring in some competition into your bankers, you will see we have seen so many cases where the client has requested the banker saying, please reduce my interest rate. I'm at 10% today. I'm at 10.5% today. Please reduce it by 0.25%. And the banker says, no, I can't do it. And then the client says, okay, I'm going to leave. The other bank is willing to fund me the same amount. Okay, I'm taking my papers. Then the bank says, no, you don't leave. I will reduce it. So many cases of these have happened in the past. So if you do not have competition amongst your banking today, bring in some competition. And if your balance sheet is good, then it's likely that you'll get a lower interest rate. If your balance sheet is not strong, then it's a different situation. Then you need to focus on building your balance sheet. And for several clients that we take on newly, the first 2 years, some clients takes 1 year, some clients takes 2 years, we build the balance sheet. By build it, with the existing business that you have, how do you make sure that you are having the right set of ratios that you have on your books. The next one is avail moratorium. These things are not working. Some of these things you've not been able to get extra funding against the existing collateral, haven't been able to find another bank who's willing to fund you. Then the next option is to avail the moratorium. And please note that I'm laying moratorium, which the government announced, right? The 6-month moratorium. First they announced 3 months, then another 3 months. That was I'm laying this out as a fifth option because it is a very expensive option. In the next slide, I'm going to show you when you should avail the moratorium. So I'll come to that in a bit. The next one, let's say you have tried, nothing is working on the bank side, you are over leveraged already, nothing is working. The next option, personal loans from friends, family, that is an option. Or the last option is to get some equity, selling 5% of your business, 10% of your business for bringing in an investor. Today, investors are also looking for good businesses to invest in. They also don't know where to deploy their money. So if you can get in touch with your financial advisor, make a proposal of your business and take it to an HNI who is willing to take a buyout, a stake of your business. That's another way to raise money for the short term. The next one is the creditor support. Reach out to all your creditors, tell them the situation that you are in today, make a part payment to all of them, especially all your critical suppliers, because if they stop supplying raw material to you, your production line is going to stop. So make a small payment to all of them to tell them that it is your intention to pay, but you're not able. So instead of making full payments to 5 creditors, make part payments to a whole bunch of them so that you keep the relationships going. The next part of this is convert one-time payments to small periodic payments. So if you have any one-time investment, one-time payment coming up, let's say any, we've had clients where we have deferred our fees, consulting fees, where we've said, instead of making this one-time payment for the project, you pay us over the next 2 years into smaller amounts. So speak to your partner, your vendors, your suppliers, and understand if they can defer their one-time payments. Next, debtor support. Now, this is an important point. If you have clients in the healthcare space, in the technology space, their business has more or less been unaffected. In fact, the businesses have grown. In the pharmaceutical space, if you have recoveries from any of these companies, you can push them harder on recoveries than some of the others which have been completely shattered. Another one that you can do is prioritize upfront payments over margins. So when you are, if a customer of yours is willing to make upfront payment, maybe you can give them a smaller discount and recover their payments. So these are some ways by which you can, a combination of these need to be used to manage your cash flows. Unfortunately, from the government, we've only received that one extra 20%. So I'm not able to lay out, too many other options, because literally from the banks, that's pretty much the support that has been offered and extended. So like I said, I'm going to talk to you about moratorium. Now, moratoriums were advertised, when it initially came, even I felt that's a fantastic move. But only when you read into the finer print, you realize that this can be killing for a business, because what moratorium actually means is it is interest over interest. So if you are not paying, let's say 6 EMIs in this example that I've laid out here, if you're not paying 6 EMIs, you are paying the bank an additional interest of 9.05 lakhs. That's a big additional burden to bear. 9 lakhs additional interest burden, because you are just skipping 6 EMIs. If you skip 3 EMIs, you're paying a 4.4 lakh additional cost. Now, of course, see, if you have no other way to tide over the crisis, you have to opt for the moratorium, then yes. But if you do have other methods of bridging a shortfall, a moratorium is actually a very expensive option. Every EMI that you skip, the interest component on that, the banks are charging interest. So it's an interest on interest which is getting accumulated, especially if you have a long tenure. So the longer the tenure, the higher your interest burden. So if you have only two EMIs left in the entire loan itself, then you can opt for the moratorium. It doesn't matter. But if you have some 5 years of your loan period left, or in worst cases, like if you've got a home loan, 15 years left, very expensive to opt for moratorium. So this is literally the truth of the moratorium. I'm going to skip this. Next one, finance mantra 5. Nothing makes money like money. Since we were just talking about interest on interest, this is the case on your income as well. Nothing makes money like money does. No business makes money like the money business. What I'm trying to tell you is, I've even shared this small illustration. 10% growth in 25 years is not 250%. So let's say if you have set aside some money and that money is giving you 10% returns for 25 years, the return that you get at the end is obviously not 250%, it is 985%. That's phenomenal. So I know that today is not a session where we're going to talk about personal investments. And that's a completely different topic that requires another 2 hours to talk and discuss. But what I am trying to drive home today is, if you need to manage your business finances and personal finances smartly, your investments need to be made smartly. And the earlier you start, the better the returns are going to be. And that's it. I'm going to touch on the personal investment section because it's important, even from a business finance. If you have funds lying in the business, how do you make sure that you optimally utilize it? So that brings us to the end of a whole set of recommendations that we have seen on managing your business profitability and cash flows. Right, the next section, and I'm going to only touch upon the important points in this section, is the government support initiatives. So there was so much talk. There was, a tweet by Nirmala Sitharaman, where instead of saying 20 lakh crore, 20 lakhs is the outflow. And there were so many memes going around that literally what we've received from the government seems like 20 lakhs, because such few people benefited from initiatives, right? Keeping politics aside, this was for many of our clients. But that is not entirely true. There are a few initiatives which have helped businessmen, and one of them is the MSME. So we all have heard about the new MSME registration, but what we may not entirely be sure is, what is the benefit? That is a key question. I'm going to not go into the investments and turnover. This is generic information which is available. In fact, I myself have taken it from online. So if your business qualifies under this investment criteria and under the turnover criteria, you must register yourself as an MSME because of the following benefits. One, bank loans become cheaper as the interest rate is around 1.5% lower. And that's a huge benefit. Just for this one benefit, I would encourage each of you, no matter which business you are in, whether you'll ever need a loan or not, it makes sense for you to register under this because of some of the other benefits as well. So one, bank loans will be cheaper. Two, MSME payments cannot be delayed by more than 45 days. The law for this hasn't been enacted yet, but it should be sometime soon. So MSME payments cannot be delayed more than 45 days. You will get a preference on government tenders. And there are a host of other benefits, but the key benefits is on the bank lending side and on being able to recover collections. So that is a huge benefit. Now the question is, how do you do the MSME registration? The registration is a very simple process. You have an online platform. From the 1st of July, the registration has changed. It is now called Udyam registration. It is not called Udyog Aadhaar registration. It's called Udyam registration. So what you need to do is go on the platform. There is a form that you need to fill. It's a self-declared form. You need not submit proofs or any kinds of papers to substantiate what you're giving in the form. So you fill some of those numbers in the form, you submit. As soon as you submit it, you get something called a URN, which is an Udyam registration number, and you get a certificate, and it's done. And there is no fees for registering yourself. So the cost of doing this is negligible. The time required is minimal, but the benefits of this may be quite large. So I highly recommend everybody to register yourself under MSMEs. One of the questions that several clients came back to us and asked us was, we are a trading entity, can we register? Because initially this was not open to some of the trading entities. But now from what we have heard from government sources, trading entities can also register. Now, another question that we got asked was, I've already registered myself as an MSME. In the earlier guidelines. Do I need to re-register today? Yes, you need to re-register. The old registration is valid only up to 31st March 2021, after which the old registration expires and only the new Udyam registration will be valid. So even if you registered earlier, you can re-register now. You need to re-register now. So that is one of the good initiatives from the government side. So if you haven't done it, haven't recommended your clients to do it, it's a good thing to speak to them about. And the next one, government initiatives. The other government initiatives. One, equity funding. What we've actually done is we have put our firm view on these different recommendations. So I'll only go over the recommendations that are really useful, and I'll skip the ones that are not relevant. So we'll speak about some of the good ones. Bank loans, we've already spoken about this extensively. PF contribution. Statutory PF contribution for employer and employee reduced to 10%, which was 12% earlier for June, July, and August. So make sure that your PF outflows is only 10% for June, July, and August. The next one is, this is a very, very useful one, income tax audit. Your turnover limit for tax audit has been increased from 1 crore to 5 crores, provided less than 5% of your receipts and less than 5% of your payments are in cash. So on the receipt side as well as on the payment side, only less than 5% should be in cash. And if that is so, your tax audit limit has increased from 1 crore to 5 crores. So if your turnover is less than 5 crores, please check for the applicability of tax audit for this year. Okay, the next one is on corporate tax rates. This wasn't really announced during COVID, but it's very essential. I've seen several companies that can benefit from this. So I've brought it in here, which is corporate tax rate. You know that corporate tax rates today, leave the new manufacturing companies, which is like 15%, a very, very attractive rate. But even for regular private limited companies, the rate is 22%. Vis-a-vis for proprietorships, which is 30%. 8% is a substantial number. So for your individual business, please see if it would make sense for you to convert yourself into a private limited company. Especially if you fall in the super rich bracket where your taxes can be 37%, 42%, moving from there to a 25%. I'm talking about with cess rates. If you're in that 42% bracket, if you can come to the 25% bracket, is going to be a huge benefit on your tax costs. So this is something that that could be very useful for your business and for your clients. Let's keep some of these things on mat. You know, TDS rates have come down by 25%. So it enables some more cash in the hands of businesses. Due date for returns have been getting extended. So yes, so I think that covers most of the relevant government benefits. This is just a little bit about the firm that we run. It's called PKC, Prakash Kochar and Co. These are some of the services. So yeah, that brings me to the end of the presentation. We can take some questions now. Actually, the firm itself, besides offering the regular chartered accountancy services, which we have been offering and are pioneers in, there are a bunch of other things that we do for clients on technology, on financial management, which is why I have been able to share all of these inputs. All of them come from live experiences at clients. So, so that is probably the reason. And so let's throw the floor open for questions. Much of the content that I have shared today applies to several businesses, but if you have some kind of special nuances in your specific business, I'm happy to listen to it and see what you can do.
Hello, ma'am. There are a few questions. I'll ask them one by one.
Yes, can I see them? Is there a place where I can see the questions?
The questions are in the YouTube chat section.
So if I log into YouTube and can I see them as well?
No need to log in. You can just click on the link and you'll be able to see.
Yeah, I have the link open here. Yes.
The first question is, tools which you have mentioned for performance monitoring, won't employees feel that company is micromanaging when the employee is productive at the same time?
So if you feel that your employees are already productive, then of course you need not you don't really need to opt for any of these tools. If the relationship with your employees is already that strong, you are confident that they're already doing a good job, you don't really need this tool. So we also actually don't have this tool for most of our people. But the thing is, I think that in this kind of a tough situation, so there are two scenarios. One scenario is your employees are already doing well. You don't feel the need for a tool. Great, please don't use the tool. However, if you feel the need for a tool and your question really is How do I speak to my employees? How do I get it implemented in my business? If that is your concern, I need the tool, but I don't know how to implement it. How do I speak to my employees? Then here is what you can do. So lay out the current situation to your employees, where the business, where revenues have dropped, 70%, 50% drop in revenues. For some businesses, literally 100% drop in revenues, but costs still exist, right? So give them two options. Tell them, hey, my revenues have come down to this extent, and I need to, but I need to still pay salaries. I still need to manage my costs. So I have two options. One, I can lay off around, lay off, if my revenues have dropped 70% to manage, I can lay off, let's say 30% of my employees. That's option one. Two, I don't lay off anybody, but I reduce my costs for all the existing employees by a 10% or by a 20%. If I don't do either of these options, then the business will shut and we will have nothing to do. Right? When you lay out, and this could be a reality for several businesses, when you lay this out to some of the employees, there will be a certain level of understanding of how difficult the current situation is. And obviously, people are not going to choose the layoff, because then those laid off people are not going to have a livelihood. The second option, obviously, is collaborating with the employer and saying, okay, I'll take a small cut. So some of the people who are earning very well, the higher part, they can take a bigger pay cut. The smaller people can take a smaller cut. And overall, to be fair, those people who are working very well need to get rewarded, and those people who are not, and that is what is fair for all the employees. And how do I know who is working how? The method is the employee productivity tool, because everybody needs to be rewarded for the effort that they're putting in. And how do I know the effort? This is the tool. So this whole communication needs to happen with the employees before you can put something in. Otherwise, it will lead to lack of trust. Your question is right.
The next question is costing important?
Yes, very, very, very important. We have seen clients where they thought that their cost of manufacturing this product is X, and hence they priced it at X plus 30%. But actually, the cost wasn't X. The cost was X plus another 20%. Right? So they were, the margins that they made were actually much lesser than the margins they thought they were making. So costing is very, very critical. There is a method to do the costing. If you are not sure how much your product is costing, I'm happy to speak offline, depending on your manufacturing process, help you arrive at the costing.
The other question is, based on COVID experience, would it be worthwhile to include a unforeseen expense line in one of the scenarios in the cash flow forecast?
Yeah, absolutely. Absolutely. It makes sense to put an unforeseen expenses line in the cash flow forecast. That is a very, very good option. If you see our format as well, there is one which talks about sanitization expenses. We can also put a general, a 5% figure, which is unknown outflows.
Okay, thank you, ma'am. These were those questions.
There's one more, keeping in mind the time value for money concept. Does deferring money or income prove to be beneficial largely? So it's a great question, actually. Given the time value of money, if I defer my expense, does it help me? Because of time value of money is why you should actually defer your expense. It will be more beneficial for you. And on the income side, if you defer your income, actually the recommendation, if you are short on cash, is please don't defer income. Even if you earn lesser margins, get the income now. That is the recommendation. However, if you're not in the cash shortage situation and the margins are higher, if you give the supplier credit, then it makes sense to defer it and earn the higher margins. So the trade-off here is, what is the incremental margin versus what is the cost of money? So if the margins are going to be higher by keeping it deferred, then it makes sense to give those give that additional credit period. The other aspect here is, if you don't give the credit period, the customer may not even come to you. The customer may switch to your competitor who is willing to give him 90 days of credit. So it's a combination of these factors. If you can explain your particular situation to me, I'm happy to exactly answer this.
Thank you, ma'am. That was indeed an insightful session. The PPT was also really very helpful. I'm sure the participants enjoyed it as well. As you said, I hope the audience would try to apply the tools in their business, also implementing the ideas such as WhatsApp shopping, which in turn would be very helpful in business. On behalf of Excel in Excel, I thank you for sharing your wisdom. We are grateful for the time and effort you took to share your thoughts and experiences with us. I also thank the audience for the participation and support. Our next session is on 10th July by CA Vijay Agarwal, who will be addressing us at 6:30 p.m. And our next session is on 17th July by Paula ma'am, who will be addressing us. Thank you everyone. Do not forget to like the video. For more updates, please subscribe to our channel. We would be delighted to have suggestions from your end. You can drop your suggestions in the comment section. Thank you.
All right. Thank you. Thanks, Nidhi. Thanks, everyone, the entire Excel and Excel team. And thank you to each of the participants for joining in. Always a pleasure to share some of our experiences. Thank you.
Thank you, ma'am.